Well, money recently has gotten much more expensive. If you are borrowing due to higher interest rates, you're paying more. So, how can you have the money that you make actually hold its value? Well, it's best to keep that credit in tip-top shape and try to avoid paying as little interest as possible. That's the idea behind tonight's all-new Money Talks. So, interest rates have skyrocketed. Well, that won't hurt your credit score directly, but if you were on the margins already, you will feel the effects. Certified financial planner Neil Vanoy explains.
Rising interest rates don't have a direct impact on your credit score, but a rising interest rate will increase the payment due on any outstanding debt that you have that has an adjustable interest rate. If you have loan payments that have adjustable interest rates, keep in mind that rising rates are going to increase those payments. That could put a strain on your budget. And if you miss those payments, if you're late on them, that will have a huge negative impact on your credit score.
Those 15 to 19% interest rates that you had been paying on your credit cards are now in the 25 to 29% range.
Anyone with outstanding debt should work on paying those down to get that under control, just so rising rates, if you have to take out any other debt, won't have a bigger impact on your budget. Credit cards have always had large interest rates, even back when rates for mortgages and car loans were much lower. So avoid carrying credit card debt anytime you can.
But if you have good credit, there are some good ways around those high rates as companies compete for your business.
I've seen several credit cards with 0% offers recently, and that can be a great way to help manage offset interest that's higher on other types of loans. If you do take advantage of a 0% offer on a credit card, just be sure to comply with the terms, make those minimum payments due, be sure to pay it off by that deadline, or you could rack up all those unpaid interest charges and lose out on that 0% offer.
And spoken like any true good financial advisor, Neil says get yourself paying little to no interest if you can.
A common misconception is that you have to actually carry a balance on your credit card for it to help your credit score or account toward your credit score. That's not true. So there's really no reason to carry a balance on a credit score, and that can help you avoid racking up interest charges.
Rates have gone so high lately that LendingTree is now calling 22% a good interest on a credit card. So avoid paying it if you can.